Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Fear and Greed is working with the team at Vanguard to bring you a series of episodes busting some of the myths around investing and giving you the information you need to help to make informed decisions. Today, we're taking a close look at ETFs, exchange-traded funds. Australian ETF assets sailed past the $200 billion mark earlier this year, with investors particularly drawn to index tracking ETFs. But what role do they play in an investment portfolio? What are some of the mistakes investors make? And how can investors use ETFs to make the most of trends like the AI boom? Vanguard knows this space better than most. It's one of the world's largest global investment management companies with more than $14.7 trillion in assets under management globally. $4.5 trillion of that is in ETFs. As always, the information in this episode is general in nature. It doesn't take into account your own circumstances. You should do your own research and seek professional advice before making investment decisions. Adam DeSanctis is the head of ETF Capital Markets at Vanguard Australia, which is a great supporter of this podcast. Adam, welcome to Fear and Greed.
Thanks, Sean. It's great to be here.
Why have ETFs become so popular among Australian investors?
Yeah, Sean, it's been a very exciting time to be close to ETFs. ETF growth has really been a global phenomenon, but to lift the lid here on the Australia market, we've seen exponential growth really over the last 10 years. There's really three main drivers that I point to explaining the growth. The first is investors really just realizing the benefits of ETFs, diversification, low cost, and the additional liquidity benefits. The second part is the adoption from retail investors. Particularly since 2020 when we saw the pandemic, there's just been an explosion both in terms of AUM and uptick from the retail investors, and we think that will continue. And then lastly, I think it's the index revolution playing out in the Asia-Pac region. We saw this happen in the US and Europe so far, and we think that investors choosing to put cash flow into index tracking products will be a good tailwind for the Australian market.
Okay, it's interesting, the tailwind for the Australian market, just the fact how important ETFs are for the overall market now compared to 5 years ago, let alone 10 or 15 years ago.
Yeah, absolutely. And I think it goes back to just the benefits of ETFs. And when you think about them, whether you're an institutional investor, a financial advisor, or a retail investor, each of those cohorts are finding ways to put ETFs into their investment strategies.
Okay. So when we talk about ETFs, they're not a homogenous group. There's all types of ETFs. Do investors tend to buy several ETFs? Do they tend to, stick to one that they like? It might be the market. It might be an ESG ETF. It might be... I'm just interested in how investors think about ETFs and invest in them.
Yeah, absolutely. So there's kind of two approaches in terms of how investors are thinking about ETFs. One way to build a portfolio might be from the bottom up, starting with more of a building block approach. So in that situation, you might be picking sort of a handful of ETFs and including some of the themes that you mentioned and trying to build a portfolio that way. The other way is more of a top-down approach. So one of the popular ways investors are actually accessing broad, diversified funds these days are through diversified funds, also known as multi-asset funds. And these are ways you can think about a multi-asset fund as a sort of a combination of 6 to 7 ETFs across different asset classes. And it's for the investors that are a bit overwhelmed by all the choices. And it's a really simple way, and the rebalancing is done from the issuer, just a really simple way to get access to funds. And we see that those products continue to be popular among retail investors.
Stay with me, Adam. We'll be back in a minute. My guest this morning is Adam DeSanctis from Vanguard Australia. What are some of the risks with ETFs? So we've been talking about the benefits, but every investment has risk as well. What are some of the things that investors should be aware of?
Yeah, absolutely. I'll focus in on two common mistakes that we see investors sometimes run into in their portfolios. And one is over diversification, and the other is perhaps holding too many niche ETFs. So on the first point, more is not always better.
Yeah.
Sometimes we see portfolios that have, many ETFs in them, and investors might actually be doubling up on exposure and paying maybe twice or 3 times for the same exposure. So think about maybe holding 3 ETFs in Aussie equities. That would be one example. So it's really important for investors to just understand the underlying companies that they're holding. I think the second one would be starting a portfolio with ETFs that are a bit too niche or narrow. So there's been quite a rise in sector funds and thematics and things in that space. And if you start a portfolio off with something that's too narrow relative to the global benchmark, you might have a lot of holes and gaps, and you might not have the proper level of diversification that would otherwise suit you.
Now, not every ETF is going to be the same either, because the people like Vanguard provide ETFs for investors. As an investor, though, what is it the things that I'm looking for from my ETF provider? Because it's easy to think, okay, I'm just going to buy the market, or I'm going to buy gold stocks or whatever. I get that. But surely what Vanguard puts out compared to a competitor, there might be differences there.
Yeah, absolutely. I mean, I think for investors, there's sort of three things that point them in the direction of, in terms of the due diligence process when looking at ETFs. The first is making sure that the ETF aligns with their long-term financial goals, risk tolerance, and plan. And that's always going to be the first place where we would recommend investors start. Knowing your provider, though, apart from market forces, how well an ETF performs can also depend on how well it's managed. So I think you want to pick a reputable and well-known fund manager with a good experience and a good track record. Comparing cost is always another important one that we always bring up. Costs come in two forms for ETFs, and it's important to make the distinction. So the management expense ratio, or the MER, is going to be one cost that a lot of investors are acutely aware of, and making sure that you're minimizing costs. Costs are one of the things that you have fully in your control as an investor. So minimize costs on the MER side. And then on the trading side, because ETFs are exchange listed, the ETF bid-ask spread is another really important cost that I would say investors probably have less familiarity with, but it can be just as important when trading any security on an exchange. So yeah, overall, align to your allocation, know your provider, and also compare costs.
Okay, so I've done that. I've worked out I want to go with, let's use Vanguard as the example. And I know there's lots going on with AI. I keep reading about AI. There's a boom going on. What's the next step? How do I make sure I don't get caught in the bust part of the boom, or fully understand what I'm investing in?
Yeah, absolutely. So I think the first point is making sure that you have really clear financial goals, and making sure that any investment that you put into the portfolio is not just extra cash that is being invested, in an ETF that you might have heard about at a barbecue. Making sure that any of those ETFs you're choosing actually go back to your long-term financial goals. And the other two things I would say: do your research on ETFs. I would say there's been an evolution in the space. It used to be that they were all index-based, market cap weighted, and in this, as that part of the market became saturated, issuers started to launch more of these thematic products. And there's two key risks to look out for there. One is volatility. Those products are inherently more volatile than a broad-based fund. So it's really important to understand what it is you're buying, and if it does behave differently than what you might expect a normal market cap weighted ETF to do. And then secondly, is just be careful of market timing. The challenge with market timing is you have to get it right twice, buying and selling. So some of these, some of the real niche thematic products, they either the fad might have already played out and you're investing sort of, on the downswing, or there might not be long-term investment merit in the idea. And so they're actually, if there is a downturn, it might not ever come back. So just doing due diligence in terms of like what is really under the hood is critically important for investors.
So just wrapping this up, any parting words of advice for someone looking to buy an ETF?
Yeah, I think it all goes back to control what you can control as an investor. We have 4 principles here at Vanguard, and the central theme that links them all together is they are within investors' control. So maybe less about buying ETFs. It's more about set clear financial goals, invest in a balanced portfolio, minimize costs when choosing products, and then also, and this is potentially the hardest one, have the discipline to stick to your plan, even when others around you might be reacting to short-term market fluctuations.
Fantastic. Adam, thank you for talking to Fear and Greed.
Thanks, Sean. Great to be here.
That was Adam DeSanctis, Head of ETF Capital Markets at Vanguard Australia. Invest strong and steady with Vanguard. Visit vanguard.com.au for more information and to read the relevant PDS and TMD and consider if a product is right for you before deciding. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.